Stock of the day. So we take a look at New Hope, who reported this morning. 11% jump in annual profit for FY 2023, boosted by strong demand and prices for coal. Company posted net profit attributable of over $1 billion, compared to just under $1 billion last year. Fully franked final dividend of 21 cents, special dividend of 9 cents. Dividend yield is something like 13.5% at the moment. As you can see, the market has liked the result. Scott Phillips, what did you think of the result? If you're after dividend yield, blimey, these coal companies are just minting it at the moment, aren't they?
Gosh, they absolutely are, mate. In fact, the company took the opportunity to trumpet a 13% yield on a purchase price. At $5.13 though, so that was 12 months ago, I assume it was. So over the last 12 months, you've done very, very nicely with income alone owning New Hope Coal. I'm a big fan of the company, mate, as a coal miner. I'm not a big fan of coal miners generally, so I think they are best in class. I am a shareholder of Soul Patts that owns some New Hope, so I'm also not unbiased here. But I think they're a really, really good example of coal mining done as well as it can be done. The results speak for themselves, but the challenge, of course, is the results speak for high coal prices more than any of that stuff. You couldn't have not made $1 squillion mining coal in the last 12 or 24 months, and that's why we're seeing these sort of results. It's a really, really strong result that you couldn't have asked for more. They're paying out a decent amount of that excess cash flow as a special dividend. So again, very, very Soul Patts in style, but they're basically saying, look, we'll keep some, we'll give you the rest because this is an unusual situation. The special dividend pretty much tells you it's not earnings they expect to continue forever. Now, for how long that continues is an open question. This has been the challenge for coal miners for ages, is how much do you pay for these guys, knowing that the coal price has been elevated for a couple of years now. Now, you kind of have to, I don't think you can avoid taking a bet either deliberately or almost by definition on the future price of coal because of the current share price, the current dividend yield, and the current level of profitability, because they are completely beholden to the global coal price, both thermal and metallurgical. I got to say, it's a really, really, really difficult one. I would happily own coal miners at the moment, ethics aside. I'd happily own coal miners at the moment who I knew would use that capital for my best interests.
Right.
I've said before on the program, I am concerned that policy decisions, whether we like them or not, may be made by governments or communities that basically mean some of these assets are stranded assets. And so I got to say, if you're going to take coal profits and reinvest them in more coal profits, you are doubling down on an end result that may or may not happen. And that's what's kept me away from these guys. I would happily, if they said, look, we'll pay out every dollar of cash earnings, we'll run this thing for cash for as long as we can because there is a risk we don't have an asset in X years' time, I would be in their boots and all because I think you're going to get a really good result out of it. If they're going to reinvest, and I was talking about coal miners generally, not just New Hope. If you're investing in more coal mines because, if a hammer, every problem looks like a nail, you're going to keep doing what you've always done. And we do end up with stranded assets. If we do, then the zero is the terminal value, in which case you have to get all that value out before you get to that point. I'm not convinced Whitehaven are doing that. New Hope are better than Whitehaven on that score. I can't say I'd buy them for that reason just now. If there was a clearer, more deliberate outcome, and again, by the way, I'm not saying that has to be, I'm not saying there will be stranded assets. I'm just saying, given there's a chance of that and a chance of a zero terminal value, you want to make sure you're getting more value up front than you are probably getting at the moment.
Okay. So you'd hold it if you've got it though, but you just
I really would actually.
Sorry?
I think that's probably right. Yep. Yeah, I would. I think that's right.
Okay. Mark?
Yeah, no, I think that was well summed up. I think it was interesting. New Hope was actually very cheap not that long ago. I mean, I remember at the time when it got absolutely hammered down and the share price went down. So let's have a look what it was. But it was where are we? Share price. While talking, I'll find it. Yeah. Because of the expectation of what everyone in the media and government say, oh, coal's history, rah, rah, rah. Yeah. So people panicked and basically no one wanted to buy them. Right. So they were incredibly cheap. Now it's still...
Or other states would follow Queensland and go put royalties on.
Well, there's political risk with it as well, which one thing that Scott didn't mention, and that is the not that they're going to shut it down, but they're going to gouge more revenue in the name of, to subsidise other green stuff. But it's basically just a tax grab. But look, they are printing money and they're on a trailing PE of 4. And their outlook statement's pretty good. Now they are totally dependent on what happens to the coal prices. But my view is, if you actually look at some of the stats I've said, coal is increasing significantly around the world. So even though a lot of people might not like that, that's the reality. And in Germany, for instance, they shut down a lot of most of their nuclear capabilities now. They're importing massive amounts of coal.
Right.
I mean, how bizarre is that?
Yeah.
But there's all this stupidity going on with governments and virtue signalling. I think coal's going to be very strong for a long time, and I bet you we're still exporting it in 30 years.
Okay.
That's my view. So I don't think it's a stranded asset. Well, I mean, there's a risk for that, but the bigger risk is governments will gouge profits and make it harder for them.
So would you buy it at these
Well,
levels?
Team Invest wouldn't buy it because it's not I can't be confident that the earnings are going to be higher in 5 years' time.
Right.
But I'm saying for anyone who's watching and who is willing to accept the risk on supply demand, because that's what it comes down to, it's very cheap.
Okay. All right.
And it's paying great dividend, as you pointed out.
Okay. So
So buy it for somebody who's happy to have that commodity risk.
Right.